Usio Inc., ticker symbol USIO. We've been talking about it. The industry is financial technology, payment facilitation. The headquarters is in San Antonio, Texas. Now, the PE ratio is updated since it's been on a run at about $2.50. The PE ratio is at about 25x. So, but when I got in, it was about at 15, which is severely undervalued for financial technology industries. On the low side, most financial technology companies, they trade about at 25 PE, 25 price to earnings. But when I got in, it was at about 15. But the PEG, the price to earning, the growth is about 0.05 at where it was at. It's still under 1 at 25. The 2023 revenue was 82.5 million, almost 83 million. You can see that there too. And the 5-year revenue CAGR for Usio was 24.3%. All right. And so those numbers are going to come in handy as we move forward, trying to extrapolate out its growth potential and where we can see the price going. As you see on the chart, at one point in 2022, when it was a part of Voyager, it was up over $6. I mean, I think it got up to 8. Then Voyager had its issues. It went back down due to like fraud and stuff like that. And Usio was only the payment facilitator for that. They didn't have anything to do with what was going on in the back end. They were just, facilitating the payments. That's what brought a lot of valuation. But and when that all came crumbling down, that's when their valuation dropped as well. But they're still a good company. They're not in any like fraudulent things that I know of that I've seen thus far. They just got a bad break with that. And, with crypto kind of loosening up again, maybe they become a payment facilitator for another crypto exchange in the future. But now it's trading about like 250. And assets wise, it has about a total equity of 18.9 million. And even though it's a financial technology company and book values don't matter a whole lot with financial tech companies in general, because you're looking at the revenues, they don't have a whole lot of physical, tangible assets on hand anyway. But it's still good to know. So the September 2024 book value of Usio, when you account for the 27 million shares they have off their net equity of 18.9 million, book value is at $1.44, give or take. So which means, when we were buying, and you can see my share price now is at my average share price is 157. I have 222 shares. I'm up 54% because I was buying earlier in December. I just haven't had time to do a video on it. But I'm gonna continue to add, and I've added at 250, and I will continue to add at 250. But if it gets lower, I'll be even more confident in adding. Because as a financial technology company, to get this close to book value with a good company and a growing company, I mean, that's the golden goose right there. I did that with SoFi. I was buying SoFi $7, $6, $5, $4. I called it out at like $5, $4. I had people in my community that bought SoFi at $5, $4, and that was close. That was as close to book value as possible. So, if we're $1 off book value of Usio, that's a good sign. There's a lot of margin of safety in that. So, as we extrapolate further and we get further away from book value, we have to find out where those prices are. And so I projected out some different CAGRs, revenue projections, just to get a baseline of what is possible, right? And so for me, if we take, 2023 revenues, because we don't have 2024's revenues yet, right? And we just do that. So the price should be about like $3.05. If you just do, revenue divided by, you do the shares divided by their revenue, right? it's going to be $3.05. And so let's look at their 5 years projected, right? So if you do 5 years projected revenues at a 10% CAGR, that's going to be $132.8 million. If we do something more in line, what's possible, a 5-year CAGR at 5 years at a 20% CAGR, we're looking at $205 million. And if they keep up their current CAGR of their past 5 years at 24%, and if the next 5 years are at 24%, we're looking at $241.8 million in revenue. And so let's look at what that would look like price-wise. We understand what the book value is at 144, but we're in the financial technology space. Assets, tangible assets aren't as important as in other industries, right? So we have to keep that in mind. And so at a 10% CAGR, compound annual growth rate, we're looking at a $4.93, price target, if we're going at that, and what its value and what its worth is, right? If it's at 20% CAGR, we're looking at a $7.61 share price. And then if it's at the 24% CAGR, we're looking at an $8.96 share price. And there's been some research out there that we're going to talk about that other funds have these high prices, stock prices out there. And so if you base off revenue, this is where we'll be going. So in 2024, base case, if we're growing at 10%, we're looking at almost a $5 share price, because you want to do 5 years forward, right? If we're still growing at 20%, $7.61, very possible. It doesn't mean it hits it, but that's what you could, reasonably say the value of the company is. And if we continue to grow at the 24% rate, we're looking at almost a $9 stock price in value, right? And so when we look at some of the Gematria, we have Usio stock 33 in reduction, simple, powerful. We understand that. We want to see that. Then we have Usio is an integrated payment solution that will thrive during age of Aquarius, powerful, 333 English reduction. Okay, this is powerful. We want to see this. Usio is an integrated payment solution that will thrive during the age of Aquarius, which we're in. We're in for the next, 20 odd years. And then we have Usio is the payment facilitator. Usio, a solid age of Aquarius stock. Usio stock during the Aquarian age, all equal 333 in English ordinal. And Usio, a solid age of Aquarius stock. Usio stock during the Aquarian age, both equal 171 in reverse reduction as well. So you're seeing the things we want to see. We see the 333s, we see the 33s, we see the powerful Gematria decodes. We understand what we've seen in Texas, what's happening, Fintech. So we're all in the right spot, and it's in San Antonio, very close. Remember, it's very close to Austin. And so let's talk about Usio's moat and growth opportunities. Like I said before, Hillside Research had a $6 price target, has a $6 price target on Usio. You can look up their research. It's actually pretty good, really enlightening, because it has helped me, understand what the company is, what the industry is, and what their different segments are. They have a lot more resources than I do, that I have at my disposal. So it was good to have a perspective to come from there. So this is some of the things they brought up. Usio targets larger, more credit-worthy customer bases. Its customer base is focused on mortgage servicers, insurance companies, utilities, apartment complexes, alternate lenders, charities, and tenant management. So a lot of bigger and stickier business, not really retail like what a PayPal would be doing or like a Stripe. Usio is also one of the only payment companies with its own Fed terminal, the other being PayPal. So that's a moat as well. When speaking of like government contracts and stuff, Usio is working with LA County, New York City as well for payment processes and different services. And so that's why they have that terminal. That is a moat. And the government really doesn't move that fast. So it's not like they're just going to be adding payment facilitators all willy-nilly. So they have PayPal on there, which is more retail than anything. But now they have Usio, which might push out PayPal with their customer bases that they focus on, because that's how they're going to be servicing their customers on what they're good at. Its customer base primarily consists of the following: nonprofit, government agencies, corporations to issue expense payments, healthcare, gift cards, corporate incentives. So it's a lot of big boy stuff. And Stripe is another competitor, but 34% of their business is computer software and retail companies. So it's added together as computer software and retail companies. They don't really, Usio really doesn't focus on that. That's Stripe, and I think we could be a big player. Like if there's two players in space, they can handle that side, we can handle this side. And nonprofits, 12% of Stripe, 9% health organizations, only makes up 21% of their businesses. So I mean, it's not a huge focus, right? And I want to bring up the approximate driving distances from Dallas, Houston, and Austin from San Antonio. Why I bring this up? It's important because Lewis Koch, who's the CEO of Usio, you would think, since it's still a small company, he's still going to be moving and shaking, get into the places where it's all happening at, right? So it's a 4-hour, 15-minute drive to Dallas. It's a 3-hour drive to Houston, and it's only an hour and 15-minute drive to Austin. And I think Tesla is moving to Austin or is already in Austin. So if we could have like a Tesla connection, it's only an hour drive to there. If Lewis is really moving and shaking, we can make something happen in this Texas boom. Now, in regards to Gematria, let's go over some of the Gematria we have. Usio, like mini PayPal post-COVID, 133 reduction. Usio is Fintech growth company, and not just certification. Usio Inc. stock, both equal 137 in reduction, and Usio is Fintech growth company, 133 reverse reduction. Lewis Koch, CEO, Lewis Koch, CEO, Usio stock Fintech, and Usio ACH payments, age of acquirers, they both equal 330 in English ordinal. And then we have Stripe competes with Usio Inc. and Usio Inc. PayPal Galileo Fintech mix equals 333 English ordinal, and Usio Inc. PayPal Galileo Fintech mix equals 333 English ordinal and 153 in reduction. So that's powerful there. It's really a mix between PayPal and Galileo. Galileo focuses a lot on big institutions, banks and stuff to handle their money. It's a payment facilitator essentially for money on that big scale. And PayPal is more retail, consumer, online consumer base, right? And so Usio is kind of in the mix of those, in the middle. Then we have Usio is getting payment facilitator client. Then we have Usio is getting payment facilitator clients that Stripe or Galileo do not care for, equals 333 in English reduction. So that is a part of the moat. We are building a client base that others aren't really looking at. So one, that's going to be stickier for us and easier to onboard people of the same ilk, of the same business, right? So if we're going for more higher credit-worthy businesses, mortgage servicers, insurance companies, and stuff like that, and Stripe and PayPal are going for the larger consumer bases in retail and online sales and stuff, that's great for them, and that's great for us because that gives us a lane, and that can keep carving that out. And the more people and the more companies we have like that before PayPal and Stripe even think about getting on that side, and Galileo, we already have a strong advantage. And then we have Usio and Singular Payback And what payment facilitation, that's the big growth factor people keep talking about. Payback from singular equals 217 in English ordinal. And that is very interesting because Usio bought singular payback in 2017. You cast the zero off, you have 217, right? So that's very good. This is what I have on Usio. I have 222 shares right now, like I brought up earlier. Up 54%. I am continuing to add because I'm looking at these projections and I'm seeing, okay, well, the PEG, the price to earnings to growth ratio, well under one. And then we have the KGARs and stuff like that. They've been growing at 24% the last 5 years revenue. And so I did the projections there, and I'm liking what I see. I think we're still heavily undervalued, even under $3. So would I like more shares under $2? Yes. And will I buy if it gets under $2? Yes. But will I wait for $2 to buy? No. Am I trying to buy a lot more shares before it gets over 3? Yes. So these are the things to keep in mind. And will I buy shares above $3? We'll see. We'll see what the earnings report comes out in March. So these are the things to keep in mind. And this is what I have on Usio. So if you like this, if you like this company, if you're interested in this company, if you want to learn more, make sure you subscribe my stock channel, data capital investments with Gematria stocks with data capital investments, and you can get this clip cut up and such in the next couple of days. But that's all I have on Usio, and we'll be adding and keeping tabs on this moving in the future.